Hey folks, welcome back to our Forex trading. This is Forex Intermediate, episode 5. We are still dealing with high probability candlesticks patterns. And in our today's lessons objective, you will understand what pin bars are. You'll be able to differentiate types of pin bars. Also, you'll be able to learn why pin bars are high probability candlesticks patterns. And finally, you'll be able to understand how to trade pin bars in terms of entry and exit. Pin bars. These are also referred to as armors. They are high probability reversal signals. They are single candlesticks patterns. Okay, remember we are still under the category of single candlesticks patterns. And there are 4 types of pin bars. We have the bearish pin bar, or what is called shooting star. We have the bullish pin bar, or what is called hammer. We have the inverted hammer, and we have the hanging man. Let's look at each at a time. Bearish pin bar or shooting star. These are single candlesticks patterns. Remember we said when we talk of single candlesticks pattern, they form as a single candlestick to confirm or to make traders make a certain trading decision. They form at the point of resistance, that is most of the time. They are they have high probability when they form at the point of resistance. They indicate rejection of higher prices. They also indicate reversal, and they are sell signals. Let's look at an example here. So where I have inscribed or circled this arrow, it shows a bearish pin bar, or what we call a shooting star. So you can see, basically we have an uptrend. Then this is like a form, not it is like, but this is a point of resistance, okay? You can see price rejection. So this is a point of resistance. Then after it forms, now this is our bearish pin bar or our shooting star. So once this completes as a sell candle, then you can enter immediately at this point. So this is your sell entry. Remember, we said that they give sell signals. Then slightly above the wick of this bearish pin bar, you have your stop loss. That is slightly above. You need to give the market room to breathe, okay? So this price came all the way to this point, retraced back, and then it went our direction. So the first take profit can be at this point, that is TP1, it was hit. The second take profit can be at this point and it was hit, okay? So basically what I prefer is that when you take a trade, it should be able to give you a risk to reward ratio of 1:3. As we proceed with the course, we shall look at the risk management and be able to determine why the risk reward ratio of 1:3 is the best for you. Okay, so this is how you can trade it. So this is how it confirms your entry, and this is how you take your profits. Okay, you look at the previous low. This was the immediate previous low, so that was the first take profit point. Then after this low, the second low is this here at TP2, and then you put your stop loss at that point, and you take profit at that point, and you can see the market came all the way to that point, and actually it even continued all the way down. Okay, so this is how you trade the bearish pin bar or shooting star. Then we have the bullish pin bar or the hammer, which is the opposite of the bearish pin bar. So bearish pin bar or hammer are single candlesticks patterns. They form at the point of support. They indicate rejection of lower prices. They also indicate reversal, and they are buy signals. Okay, so let's look at an example. So at this point, this candle, this is a buy a bullish, this is a bullish candlestick, and yet this is what we are calling bullish pin bar. Okay, this is a bullish pin bar. And at the end, as long as this candle closes as a bull candle, so once it is finished forming, we take our entry at this point. So that is our buy entry. Immediately this candle closes, you take your buy entry. Then slightly below it, you have your stop loss, and your take profit one should be your immediate high, which is this point, and then the other point should be the next immediate high, which should be here or here. However, in this case of scenario, we have what we call a supply area or a supply zone, or what many people call as a order block. Okay, so we have a bearish order block. The reason why I had to put the TP slightly in the middle of this bullish order block. So don't worry about that bullish order block or supply zone. We shall cover all those in our course as we proceed. Okay, so basically, as I said, ensure that your risk to reward ratio is 1:3, and at the end or in the long run, you'll be a profitable trader. Okay, so you can see again, this was a downtrend. We had a downtrend, and the bullish pin bar formed at the end of a downtrend, whereby we have like an area of support. Okay, so that's how you trade them. That's how you take your entries. Key points to note. For the bullish and bearish pin bar to be valid, they must have the below characteristics. They must have long wicks, that is upper long wick for bearish pin bar, and lower long wicks for the bullish pin bar. Okay, so the body should form towards the end of the candle, not in the middle. If a bullish pin bar closes as a sell candle, you need to wait for the next candle to close as a bullish candle to confirm entry. This is very key, guys. If a bullish pin bar closes as a sell candle, wait for the next candle to close as a bullish candle to confirm entry. If a bearish pin bar closes as a buy candle, okay, wait for the next candle to close as a bullish candle to confirm entry. Okay, are we clear? So are we clear? I believe that is clear. Okay, so let me go back and try to demonstrate what I'm saying. So this is a bullish. We have said this is a bearish pin bar. Okay, this is a bearish pin bar. So it closed as a sell candle. Therefore, we enter immediately. However, if this candle is still a bearish pin bar and closes as a bull candle, so this means that bulls are in control or buyers are in control. Therefore, we need to wait for the next candle to close as a sell candle, and then we have our entry at along that point. Okay, take note of that. It is very critical. In this other scenario, this is a bullish pin bar. Okay, this is a bullish pin bar signifying buy. If, for instance, this closed as a sell candle, then we need to wait for the next candle to close as a buy candle for us to have our entry, or for us to confirm our entry. Okay, those are very critical points that you need to note. Then we have what we call the inverted hammer. And the inverted hammer, this is a single candlestick pattern that appears when there is pressure from buyers. Okay, they happen, or they appear prior to the trend, which should be a downtrend. Okay, or in essence, they must appear. That is, they must appear when there is a downtrend. So after the downtrend, that is when they need to appear at the bottom of a downtrend. Okay, so they will form at the bottom of a downtrend to signal possible bullish reversal. Inverted hammers shows that buyers are exerting the buy pressure, okay? So this is what I'm talking about. This is an inverted hammer where I've circled it and shown with an arrow. And you can see we had a downtrend. Then this is a point of support, okay? Then this hammer, this inverted hammer forms. So you can see the wick, it's from above, and the body, it's below. And this is a downtrend. So once you see that, this will be signifying to you there is a possible reversal of trend, okay? And besides that, we had other indicators, this candle as well. It was an indicator of a possible reversal. Then besides it, next to it, we have another confirmation, okay, this candlestick. And therefore, once this candlestick happen, the inverted hammer happens, it warns you that the price might reverse anytime. But since we're in a downtrend, we expect an uptrend, okay? And you can see once it formed, we had the uptrend, okay? We had the uptrend. To confirm entry with these types of candlesticks, the next candle needs to close as a buy candle. And you can see we have two candlesticks patterns here which closed as buy candles. And therefore you have your entry at that point. Then your stop loss will be slightly below the low of this candle. You can see this wick. So it needs to be slightly below that point. And then your first take profit should be the immediate high, which is this. And then we have another immediate high, which was around this point for your take profit too. And this should give you a risk to reward ratio of 1:3. At least you shoot for a risk to reward ratio of 1:3. Let's look at the hanging man. And the hanging man, this is a single candlestick pattern forming at the end of an uptrend. Okay, so they are used to signify possible change in trend direction, that is a reversal. At times, the reversal may not happen immediately when this pattern is formed. Therefore, it issues a warning that the market may reverse soon. So this, you can see we had an uptrend, and this is our candle of interest. This is the hanging man, okay? So you can see it's wicking from below. And we have this, we have the body at the end of that candlestick, okay? So in such a scenario, once it forms, once it closes, you need to have your entry point at slightly at the opening price of that, at the below the price of that candle. You can see I have marked the line, so that is your entry. And then you have your stop loss slightly above the high of this candle. Then you take profit 1 at this point where we have this sell candle. Then take profit 2 at this other point where we have the low. And all this should give you a risk to reward ratio of 1:3. Okay, so you can see the characteristics. There is an uptrend. Then we have also other indicators here that signifies reversal. And now when this hanging man happens, you are 100% sure, or you are 99% sure that the trend is now reversing, and now you look for your entries, okay? I don't want to say 100% sure because anything can happen in the market, and every setup, there is no setup or there is no trading strategy that is 100% foolproof, because the market might act anyhowly as it likes, okay? The reason why we say that the mindset of a trader should be thinking in probabilities, okay? So we shall talk about that when we shall be doing about the psychology of a trader. You need to have the right psychology. So we shall talk about all those things, okay? So that's how they happen. So the key points to note here is that for inverted hammers and hanging man candlestick pattern to be valid, or that is to be of high probability, they must have the below characteristics. they must have long wicks that point inwards towards the price action. Okay, so for inverted hammers, they should have long upper wicks, and for hanging man, they should have long lower wicks. So this is what I am talking about. This is an inverted hammer, so it should have long upper wicks. This is a hanging man, so it should have long lower wicks. The body must form towards the end of the candle. Okay, so you can see again, the body is forming towards the head of the end of the candle for the hanging man. And for the inverted hammer, the body is also forming towards the end of the candlestick. Those are some of the characteristics that you should be looking for to identify these patterns. For inverted hammer, the next candle must be a bull candle to confirm entry. For the hanging man, the next candle must be a sell candle, confirm entry. Okay. So this is so in this scenario, this is a sell candle, but a hanging man. If we had a buy candle here, but a hanging man, then we should have waited for this candle for the next candle to close as a sell candle for us to enter at this point. But we took our entry here because this closed as a sell candle, hanging man, showing that sellers are now in control. Okay. For the inverted hammer, we said that since this closed as a sell candle, we had to wait for the confirmation of the next candle to close as buy candle for us to have our entry. So those are very key pointers that as a trader, you need to look at so that you are able to identify your entries. So as we have seen, pin bars, or what we call hammers, they are very high probability candlesticks that you need to be aware of, that you need to be able to trade them, get your entries, and also how to set your take profits. In the next lesson, we shall be looking at the two candlesticks patterns, and therefore ensure that you like, subscribe, so that you don't miss the next lesson. Thank you so much.